You've probably heard stories of people building massive wealth through real estate. Maybe you've even seen someone in your own circle buy a few properties, and suddenly they're taking vacations you can't afford, retiring early, or living life on their own terms. But here's the truth. Real estate riches aren't just for the wealthy elite or those with inside connections. With smart finance strategies, even the average U.S. investor can build a powerful portfolio and generate long-term wealth. Stick with me because today on USA Finance Hub, we're breaking down how you can use real estate to supercharge your financial future. Real estate in the U.S. continues to be one of the most stable and rewarding investment options, especially when compared to volatile stock markets or low-yield savings accounts. But success in this space isn't just about buying property and hoping it goes up in value. It requires smart financial planning, knowing when to leverage debt, understanding tax advantages, and choosing the right properties in the right locations. So, let's start with the foundation, mindset, and financial readiness. Before jumping into any investment, it's critical to assess your financial health. Do you have a strong credit score? Is your debt-to-income ratio manageable? Have you built an emergency fund? These aren't just technicalities, they're key factors lenders look at when approving you for investment loans. Having your finances in order not only improves your chances of loan approval, but also helps you secure better interest rates, which can save you thousands over the life of a mortgage. Now let's talk about leveraging financing wisely. One of the biggest advantages of real estate investing is the ability to use other people's money, typically the banks, to build your wealth. This concept is called leverage. For example, with just 20% down on a property, you control 100% of the asset. If the property appreciates over time, your return on investment can be significantly higher than if you'd paid for it entirely in cash. But here's the catch: leverage amplifies both gains and losses. That's why smart investors only take on calculated risk. That means doing your homework, running the numbers, and making sure the property cash flows from day one. Cash flow is the heartbeat of any real estate investment. This is the net income you earn from your property after paying all expenses: mortgage, taxes, insurance, maintenance, and property management. Positive cash flow means your investment is self-sustaining and even putting money in your pocket each month. Negative cash flow, on the other hand, can quickly drain your savings and lead to financial stress. So when analyzing a deal, be conservative. Account for vacancies, unexpected repairs, and potential interest rate hikes. It's always better to underestimate your income and overestimate your expenses. Now, let's move on to one of the most underutilized advantages in real estate: tax benefits. The U.S. tax code is surprisingly friendly to real estate investors. For starters, you can deduct mortgage interest, property taxes, operating expenses, and even depreciation, which allows you to reduce your taxable income without actually spending money. In addition, if you hold a property for more than a year, your profits may be taxed at the lower long-term capital gains rate. And if you use a 1031 exchange, you can defer taxes altogether by reinvesting your gains into another property. These strategies can save you tens of thousands of dollars, so it's worth working with a tax professional who understands real estate. Location, of course, remains one of the most critical factors in real estate investing. But it's not just about picking the hottest city. Smart investors look for undervalued neighborhoods with strong job growth, low crime rates, good schools, and improving infrastructure. You want to be ahead of the curve buying in areas before they become popular. Keep an eye on market trends, talk to local realtors, and always visit the neighborhood at different times of day to get a true feel for the area. Remember, you're not just buying property, you're buying into a community. Another key strategy used by successful U.S. investors is diversification within real estate. Don't put all your money into one type of property or location. Consider mixing residential rentals, short-term vacation properties, and even commercial real estate like office or retail spaces. You can also explore real estate investment trusts, or REITs, if you prefer a more passive approach. These allow you to invest in large-scale properties without the responsibilities of direct ownership, and they often pay regular dividends. Let's not forget about partnerships and creative financing. Not everyone has the capital to go solo on every deal, and that's okay. Teaming up with other investors, using seller financing, or even tapping into private money lenders can help you grow faster. The key is having clear agreements in place and ensuring every deal is a win-win. Real estate is a relationship business, and building trust is everything. If you're new to investing, start small. You don't need to buy a 10-unit apartment building on your first deal. A single-family rental in a good neighborhood can be a great way to get your feet wet. Learn the ropes, make mistakes on a smaller scale, and build your confidence. Over time, you can scale up as your knowledge and capital grow. Now, if you're watching this and thinking, I don't have enough money to invest, don't let that stop you. Start learning. Read books, watch videos, attend local real estate meetups. Build your credit. Save aggressively. Get in the game, even if it's just as a partner or a house hacker, renting out a spare room. The earlier you start, the more time your investments have to grow. At the end of the day, real estate is not a get-rich-quick scheme. It's a long-term wealth-building tool that rewards patience, discipline, and smart decision-making. The most successful investors aren't always the ones with the most money. They're the ones who stay consistent, keep learning, and adapt to the market. So whether you're just getting started or looking to sharpen your strategy, remember that building real estate riches is possible for anyone willing to put in the work. Use the financial tools available to you. Leverage smartly. Maximize your tax advantages. And always run your numbers. If you found value in this video, don't forget to like, subscribe, and hit the notification bell so you never miss an update from USA Finance Hub. We're here to empower everyday Americans with the financial knowledge they need to build real wealth one property at a time. Thanks for watching, and we'll see you in the next one.